Hi, and welcome back to another Bitcoin update. Today, we are going to be taking a look at the on-chain data to give some insights into what is going on with the price action of Bitcoin based on the on-chain metrics. This is something that I like to try to get into every now and again. It has some really key points that are of reference for many investors who like to understand a bit more about what is going on with the price action of Bitcoin without having to look at the technical analysis charts. Let's roll that intro and get right down into it. Okay, guys, so here we are on the data portal. This is a part of our membership platform, 𝗕𝗘𝗪𝗚.io or membership.𝗕𝗘𝗪𝗚.io. There are links to this in the description down below. If you are a Trader Plus member or higher, you will get access to the Data Zone data portal, and that is what we're looking at here. Okay, so little plug there. If you want to become a member, there's so many great perks, even outside of the data and on-chain analysis that we have here. So well worth checking out if you haven't done so already. So we have obviously all these tabs on the left-hand side. I'm just going to rattle through some of these just so everyone has a bit of an understanding as to kind of the basics, and then we'll get into the more nitty-gritty stuff. So over here we have the overview. This is for Bitcoin. Bitcoin is the asset that we're going to be talking about today. We've got a whole host of other ones on here, but we are just talking about Bitcoin. So Bitcoin overview, obviously 69K all-time high. We know this. We know this was the 10th of November, 2021. And we also know that we're currently 30% down from its all-time high. There's 21 million in maximum supply, 19.6 million BTCs out there in circulating supply at the moment. Okay, it's been 822 days since our all-time high. Okay, moving over. So basics, we don't really care terribly too much about that. Up here, we obviously have some more interesting data points. We have the 19.6 million circulating supply, the 21 million maximum supply and total supplies, the market cap sitting here at 936 billion, but the realized market cap 451 billion. Okay, so let's kind of just understand what market cap is. I talk about this from time to time quite passionately because a lot of retail investors look at market cap and think, oh, it's fantastic. But you can see right here that basically half of the market cap is realized market cap. What is that? Well, this is the price that was paid for every single piece of Bitcoin when it was last moved from one address to another. That's why they say it's realized. This is the price in which Bitcoin was valued at when it was moved versus just the circulating supply multiplied by the price, which gives you 936 billion, right? So understanding that the amount of money that's gone into Bitcoin is not the market cap. Even the realized market cap here doesn't actually show you the liquidity, doesn't show you the amount of money that's gone into BTC, but it does give you a bit of an idea as to kind of the scale of things, right? Actual market cap, as it is kind of commonly known, is very misleading. It doesn't actually show you very good metric. It shows you the idea of value without giving you the idea of value. It's quite comical almost. But the realized market cap at least gives you a little bit more of a ballpark figure, right? This is when Bitcoin was bought and moved. If it hasn't moved for over a year, and then how on earth can we look at market cap and think that that is actually meaningful? Realized market cap gets you closer to it, but ultimately, really what you're looking for is liquidity. Liquidity is the king of metrics when it comes to trying to think about market cap. Ultimately, realized market cap is half. It's actually under half of the actual market cap. Shows you the idea here that things are not as buoyant as I guess a lot of retail investors would feel like if they just look at $1 trillion market cap for Bitcoin. Okay, understanding the differences are very, very important. Now, addresses, there are 51.7 million. Remember that number. We'll talk about that in a moment. 963,000 addresses were active in the last 24 hours, of which 644,000 received Bitcoin and 683,000 sent Bitcoin. There is overlap here, so some addresses both received and sent BTC in the last 24 hours. Transactions in the last 24 hours, 406,000. The fees paid for those transactions, 1.9 million or 41.21 ETH. There were 152 blocks added to the blockchain. Blockchain height at the point of my snapshot was 829,901. Inflation on the daily is 0.0048, so 0.0048% on the daily. That's 1.77 yearly inflation rate for BTC. Obviously, with the halving coming up, we're going to see that dramatically drop. There were 950 Bitcoin issued in the last 24 hours, worth $45.4 million. Obviously, the halving event is going to halve all of those rewards and is going to add more strain to the mining operations, profitability, their bottom line, all of that kind of stuff. Whereas it doesn't have much of an impact now on the circulating supply. So understanding that the supply-demand balances are going to be reasonably where they are today, there isn't going to be a huge shock to that system by halving your inflation rate. Obviously, you're going to halve the amount of new Bitcoin that is being issued, but we're only talking about 1.4 million Bitcoin left to be mined, right? So in the history of Bitcoin, the halving event had more of an impact because there was less circulating supply, whereas now we are pretty much majority out there, minus 1.4 million, that halving the additional 1.4 million yet to be mined is actually less impactful to the supply-demand imbalances, less impactful to price movements outside of just pure FOMO when it comes to that kind of stuff. The halving event, though, will have a pretty dramatic effect to the mining operations and the profitability of the mining operations. And that is a big concern if you're invested in Bitcoin, at least, you know, in the next kind of 1 to 2 decades anyway. Moving on, we're going to have a look at the wallet analysis. We're going to just start on the real low side of wallets, right? So here we are talking about wallets that have over 0.001 Bitcoin. Okay, so this is basically the smallest wallet size, Bitcoin Dust. And well, you can see that there's 24.5 million wallets that have over 0.001 BTC. Now, do you remember that number? 51.7 million addresses. Okay, so there's 51.7 million addresses. However, only 24.5 million of them have 0.001 Bitcoin or more. Essentially, there's over half of the Bitcoin addresses, the total addresses, are just absolutely empty. And that means that if you're just looking at the number of addresses that are in existence and you're seeing that number grow over time, you know, you might be thinking, oh, so many people are really bullish on Bitcoin. It's got a huge, amount of adoption to it. The reality of the situation is actually no. Most of those wallets are empty. This is a common trick played by many different blockchains. So do be very open-minded to understanding just because you see wallet growth doesn't necessarily mean that those wallets have actually got cryptocurrency in them. Likewise, if you see staking metrics on the rise, doesn't necessarily mean that the number of wallets staking are staking a meaningful amount. Be very open to the idea that maybe some of these metrics are being manipulated to trick retail investors into thinking something better is happening than it actually is. Now, that's not the case for Bitcoin, because I still think Bitcoin's actually a really good position. It's looking pretty healthy. There are a few concerns. I've been through those many times before, and I'll talk about those in this video as well, no doubt. But I'm really kind of referring to other kind of newer blockchains that kind of show you exponential wallet growth, but actually they're actually just paid services out there designed to basically bot up the amount of wallets that exist to try to make it seem like there's a lot of activity when there simply isn't. And diving into this kind of data really highlights that kind of stuff. So on the wallet counts, we can see 24.5 million wallets that have over 0.001 BTC in them. You can see that these are actually down over the last 60 days, right? They're not exactly looking overly strong. This means that we are seeing essentially some profits being from the really more vulnerable retail layers, right? People who have access to a small amount of Bitcoin, not a massive amount, a few $100s in BTC, and they're basically taking their profit. This is actually a pretty reasonable thing to see as we have seen moves to the upside, and this is a very vulnerable part of retail investors. These are people who are, living paycheck to paycheck, and when they've seen some growth, they're going to cash that in, right? That's kind of what we're seeing here. We're not seeing huge amounts though. We have seen a 1.78% drop in the last 30 days. Okay, so it's still quite meaningful. I mean, we're down about 400,000 wallets, right? So just kind of let that sink in. 400,000 wallets of 0.001. It's not a lot of Bitcoin, but it's a lot of people, right? So just bear that in mind. It's actually quite good to see, in my opinion, to see people making money, taking profits off the table. Moving up the scale here, we have another 50% drop between the 0.001 and 0.01 Bitcoin or more. Okay, so we go from that 24.5 million down to 12.5 million, right? So we already see a significant reduction in the number of wallets holding significant amounts of Bitcoin. So here we have 12.5 million wallets. And again, you're seeing more profits getting taken. Again, these are vulnerable layers, right? So we're talking about people who own 1% of Bitcoin now, 1% of a Bitcoin. So they are talking, a few $100s. They're in here, they've seen some profits and they've taken them. So in the last 60 days, very commonly here, you can see it's down 0.37% and 1.37 in the last 30 days. So it's good to kind of see profits getting taken. And again, I really want these guys to be the most successful because these are the ones that I think are the most vulnerable within the space. Some retail investors that have over 1 Bitcoin, for example, can take some hits on the chin. Likewise, 10 Bitcoin or more, the high net worth individuals. And the whales, I really couldn't care whether they lose. So I think these are the ones, these first 3 that we go through are really quite important, that they are winners, they're not losers. I don't want to see these guys suffering because I think these are the ones that are going to be really heavily impacted by major swings in the market. So it's good to kind of see these wallets actually taking profit after such a significant growth to the upside. Now, as we move this up again, we drop down to 4.5 million wallets. This is basically 10% of a Bitcoin or more. Again, very commonly you see here and over the last 30 days down 0.27%. So some profits are being taken here, but it's not a lot. These guys are, again, 10% of a Bitcoin. They're a few $1,000s into BTC, and they're holding it for now. Now, I would like to see these guys also take more profits, just because I do feel that profit taking is very, very important, specifically as I do expect a correction to come on into the market as prices moved up very aggressively recently. And so I want to see these guys really kind of locking those profits in and being successful in the space. So we do see a little bit of it. It's not as much as I'd like to see though, and that's quite unfortunate. Now, as we move up, of course, these are, again, people who have invested pretty sizable amounts of money into crypto, still retail investors, they still act emotionally within the market. Some profits have been taken. There are 1 million of these. So we've dropped down, by the way, guys, I should have said 4.5 million wallets to 1 million wallets. So we now drop 75%. Okay, so as you can kind of scale up these wallet sizes, you note that the wealth is really kind of highly concentrated, right? And we're seeing that the larger the wallets or the larger the investment, the fewer the wallets there are. But the wealth gap is quite extraordinary, right? We are dropping down very significantly now as we start to ramp up these wallet sizes. So the number of wallets total really is insignificant by the time you get to a wallet that has just 1 Bitcoin or more in them. So 1 Bitcoin or more, 1 million wallets in the last 60 days is down 0.15%. In the last 30 days, 0.08%. Last 14 days, last 2 weeks, down 0.1%. Ultimately, you can see here that they are down a little bit over the last couple of weeks, but they're not really taken profits, not in the same way that we have seen with larger size wallets, which we'll get to in a moment, or the smaller size wallets. It seems that there's this pocket in the middle who are true believers in Bitcoin. I mean, maybe having 1 Bitcoin, it was always a big aspiration, so they're not likely to sell that. I know there's a lot of people who aspire to hold 1 Bitcoin for life, essentially. And so this is an interesting kind of level. They've heavily accumulated, but they have seen in the past some selling pressure, right? Specifically as we get into some bear market low points, there's a lot of usual selling pressure. Now, we haven't seen that so far. We have seen a bit more of, I guess, consolidating around here. Not a lot of new money coming in, just old money kind of just hovering around for a while here. Growth-wise, we've seen 3.93% in the last year. In the last 6 months, though, it's been 0.6. So a lot of the growth was up front, and we haven't seen much in the last 6 months or so. Now, as we go up another layer, we are dropping again a very significant amount amount, 85% drop now, as we get into people who own 10 Bitcoin or more, and heavy profits have been taken. Okay, so these are your high net worth individuals. I still class these as retail investors because they overreact according to how their wallets have been decreasing and increasing in relation to price. But with this, we have seen a very significant drop in these wallets, right? So as we can see here, all these different time frames, 1 year, 6 months, 3 months, 2 months, and so forth, they're all negative. That's because profits are being taken as prices being moved upwards. Okay, and so we can see a very common theme here that profits are still being taken even at this point of recording this video at the high net worth individual layer, right? So 154,000 wallets and dropping at the moment. Okay, so it's interesting. You know, we did see this peaking up at 156,000 wallets just 6 months ago, and now we are dropping down quite significantly from here. Now, if we go actually and find this peak, we can see that it was 57,300. Actually, that's not quite 56,780, 768 is 6 months ago. That's the peak of what we see up here on the chart. So we have seen, you know, these guys basically selling their Bitcoin to anyone who's willing to kind of buy it on the way to the upside. Now, this story is pretty consistent when we start jumping up into the larger side wallet as well of 100 Bitcoin or more. We drop down again a very significant amount. There's only 15,000 wallets now that have more than 100 Bitcoin. And here we can see some real interesting selling pressure. If we zoom in, you can see that even as we're pushing up right now, these guys are taking profit. Now, 100 Bitcoin or more, I've likened these guys to just actively trading the market. You can see that for the last few years or so, these guys have actually been diminishing over time, but they have just been swinging in and out of the market. Not like they were in the real early stages of 2017, 2018, where they made significant growth from buying really, really cheaply. It was actually a lot easier to get 100 Bitcoin. The second that Bitcoin started to reach up into that kind of $20,000 level, it became a lot harder to acquire 100 Bitcoin or more. And so you do see these traders coming in and out of Bitcoin at 100 BTC or higher. And at the moment, they are still diminishing. 2.22% down in the last year. Profits are being taken as prices pushed upwards. So we've been talking about this for a while. It's not anything new. Now, if we jump on over into the 1,000 BTC or more, now, I'll just zoom this back out if I can. There we go. These are your whale wallets, right? The whales have historically been selling during the bear market, and they even sold the FTX low, and they kind of just traded sideways here for a long period of time. I don't think the market conditions are right for these guys to come on in, but they could have also pivoted more towards ETFs rather than actually direct BTC holdings. And that could be really interesting kind of move, right? So we were talking about back in 2022, before all the ETF stuff, these guys essentially waiting for a new move to the low, to the downside, so that they can accumulate and so forth. I think they've probably made a pivot completely out of this space over into ETFs, and we have seen another surge to the upside with these wallets, most recently jumping up a little bit. Okay, so we're now at 2,060 wallets, okay, on the BTC whales. This is basically players who have over 1,000 BTC, right? We can see that they've dropped down significantly from where they were, and we are now at December 2022 levels, right? So we've gone back up to where we were during the FTX crash, okay? So that's where these whales are. They're nowhere near where they were prior to, let's say, the 2021 bull market, right? In the 2021 bull market, there were 2,100 in April of 2020. That was at the low. And obviously, they accumulated aggressively during late 2020, upwards towards kind of 2,200 wallets. So we know we are significantly lower than we were previously. But we do need to see the backing of these guys into this next bullish market if we want to see significant amounts of supply-demand imbalances. So it's good to see a little bit of growth here. We're up about 2.44% in the last 3 months on these guys. So it's going to be interesting to see whether they sustain this growth or whether they actually start to decrease and actually just continue selling off BTC. I think a pivot has occurred with some of these whale investors actually now focused more on ETFs than directly holding Bitcoin. And I do think there's some new whale potential coming in here in the shape of larger investors who now have some eyeballs on Bitcoin but don't want to go through the ETF route. Nonetheless, very interesting data from the whale side. Now, the 10,000 BTC or more is not as good of a story as the 1,000. So here we have 110 wallets. You can see that during the bear market, they were accumulating. And basically, during the moves in 2023 and 2024, they have been dumping on the market. They are down 3.51% in the last year. In the last 3 months, the last 90 days, are down 1.79%. Now, in the last 2 months, they have accumulated again, pushing the price up to that $48,000 level. In the last 30 days, actually specifically 4.76%, as you can see. In the last 2 weeks, though, more selling pressure has mounted, and we do actually see some small fluctuations occurring here. Now, 10,000 BTC or more is a large amount, and there's 110 of these wallets, so that could flood the market pretty dramatically should they choose to do so or band together. It looks like they have already been doing this, so I wouldn't be surprised if $48,000 is another kind of point for them to be taking profit. I'll be keeping a close eye on this. Bearing in mind, there were 82 wallets down in the October 2021 lows, that we might actually find ourselves with mounting selling pressure as the higher the price action goes. Now, we'll take a quick look at the exchanges because this is also interesting, right? Specifically, when we start thinking about why the price is moving the way that it has done. And this is really important. As you can see here, this chart that I was just messing around with, it shows us the total amount of Bitcoin on exchanges. The exchanges for reference are Binance, Bitfinex, BitMEX, Bitstamp, Bittrex, Gemini, Huobi, Kraken, and Poloniex. Now, with these exchanges, the key thing that we've noticed, right, was a significant amount of inflows during July 2023. During these high inflows, more Bitcoin going to the exchanges, we see price going down. And when Bitcoin is leaving the exchanges, we see price going up, right? So we can see that in the early part of 2023, Bitcoin on the exchanges dropped off. That pushed price of Bitcoin up higher. And when Bitcoin went back on the exchanges, price went down. And so we have all of these little dips that are going on here, right, with Bitcoin leaving the exchanges. And this corresponds with the price action of BTC moving upwards. And so we see at the moment with Bitcoin's price moving up towards that $48,000, we can also see that the supply on the exchanges is shrinking. Now, I talk about this all the time because the main kind of point of price in itself and how to move price, it all comes down to the supply demand. It doesn't really come down to anything else. And so if your supply is to shrink and your demand is either static or increasing, price goes up. And if your supply was to go up and your demand was to shrink, then the price is going to go down. Okay, so when we take a look at our data here, the supply is shrinking and demand is static or growing, then price is going to be going up. We have whale activity showing us that wallets with over 1,000 Bitcoin are increasing recently, and we haven't really seen terribly too much in the way of selling pressure from the 10,000 Bitcoin holders or from the 1 Bitcoin holders, for example. That means that volume, the demand aspect is either static or growing while supply is shrinking and price has been moving upwards. In the last year, we've seen 887,000 Bitcoin leave the exchanges. In the last 30 days, it has been 65,000 Bitcoin that's come away from the exchanges. So we haven't seen dramatic changes in demand, but we have seen enough of a slippage in the supply element for Bitcoin not being available for purchase that has allowed Bitcoin to continue to grow. Okay, so this is actually a really key thing that we see within the data that shows us that Bitcoin price movements have been directly impacted by the amount of Bitcoin that's available on the exchanges, and you can correlate the two. Now, when we take a look at liquidations, there's a lot of activity still when it comes to people going long and going short on the market. In the last 24 hours, we've seen $32.2 million of liquidations, of which 77% were short positions. So a lot of short positions have been liquidated as price has moved up higher. This is pretty common. The question I have in my head is 22.94% of long positions were also liquidated. So I imagine that people were maybe just gambling, not using proper risk management, not using good stop losses and got wrecked as they were FOMOing in at the top there maybe. But nonetheless, we have seen a pretty sizable amount of selling pressure from or short positions, I should say, in the market. Not really selling pressure because leverage positions are different to spot positions, and we don't really see terribly too much in the way of spot positions at the moment. It's a lot more leverage currently, but 77.06% on shorts being liquidated. Binance was the exchange with the most amount of liquidations at $10 million, of which that $10 million, 7.2 million were short positions. OKX takes second spot at 7.9 million total, 6 million being short positions. Huobi is in third at $5.5 million and 4.5 million were short positions. And BitMEX is in fourth at 4.4 million and 3.9 million were short positions. Bybit was 2.8 million total and 1.8 million were short positions. CoinX 1.2 million and 1.1 million were short positions. Bitfinex $38,000 total and $38,000 short positions. And it's because short is the obvious answer from the charting point of view. But obviously cascading liquidations actually causes price to push upwards, and we do see supply on exchanges shrinking, fueling these moves to the upside. So it's pretty easy, I guess, to kind of sit on a video and say, I call manipulation. But I do think that there is manipulation of the supply-demand elements in contrast to kind of the price action. I do think that the supply is being pulled away from the exchanges to sustain the price for now. And I think that's going to dramatically change when we start seeing some of these liquidations when it comes to people like FTX and Gemini or Voyager and so forth. I think we're going to actually see potentially, or Genesis, sorry, I should say, when Genesis is 1.6 billion gets approved and the market is still buoyant, I think that's when you're going to see an influx of supply and you're going to see the true kind of moves to the downside start to emerge. But I don't think they're going to be massive catalysts without a Federal Reserve pivot, of course, which I do think is going to be bullish, but will come at a really negative time. So that's the data I have for you today. So why not check out this video here where I'm talking about the Bitcoin halving. I think there's some interesting things happening over the next few months that everyone should know about.